Okay, guys, this is going to be the strategy of the week, and we are going over some of the indicators that we use at HFO to find trades. And basically, with these, you're going to be looking at a lot of different indicators showing what basically mathematical equations are. Basically, it shows you how to translate these mathematical equations, these graphs, into should I buy this? Should I sell this? Buy a call, buy a put, stuff like that. And just want to bring up right before that all stock trades, whether you're buying, selling, call, put, you're going to want to be relying on multiple indicators, secondary and primary. Primary being obviously more important than secondary. And basically never make your decision off of one indicator. You're always going to want at least 2 to 3 indicators showing bullish or bearish, whatever you think it's going to do. So we're going to start with the strategy of the week. We're going to start out with the simple moving average. It's okay if you're not familiar with a lot of these. That's why I've added a lot of the definitions. Just thought I'd go over them real quick. It is a simple arithmetic moving average that is calculated by adding the closing price of the security for a number of time periods and then dividing this total by the number of time periods. Short-term averages respond quickly to changes in the price of the underlying, while long-term averages are slow to react. In this, for the sake of this, we are using 7-day, 20-day, and 50-day. And that's exactly what they sound like. This is the moving average of 7 days out, 20 days out, 50 days out, for going from shortest to longest. And basically you're analyzing the trades from there. This graphic only shows the 15 and the 50, but the general overview of the SMAs is going to be that the shorter term simple moving averages, when they cross over a longer term moving average, that's going to denote a bullish trend. You can see the stock maybe start to rise, and the opposite is true. If it crosses below the longer moving average, then you can expect probably some bearish trends going on. Next is going to be the MACD, which is the moving average convergence divergence, and this is a really good one. We like to use this one. Just a brief overview of it is a trend following momentum indicator that shows the relationship between two moving averages of prices. The MACD is calculated by subtracting the 26-day exponential moving average from the 12-day EMA. A 9-day EMA of the MACD, called the signal line, is then plotted on top of the MACD, functioning as a trigger for buy and sell signals. So basically the MACD is showing you the momentum of the stock, and basically the dotted line is going to be the downward cross. That's going to be showing, as you can see, there's going to be an upward trend when the solid black line crosses above the dotted line, and then when the black line falls below the dotted line, then that's going to be a very bullish pattern, and that's going to show you that it's probably going to go into a downtrend. And this is kind of the momentum of the stock, kind of where it's, I think of a rock rolling down a hill. Like, where is it going to go next? Where's the momentum going? It goes up and down, up and down. This one's really helpful, and it's definitely good to use with the simple moving average. Next is going to be the average directional index, and just a brief overview of it. It is an indicator used in technical analysis as an objective value for the strength of a trend. ADX is non-directional, so it will quantify a trend's strength regardless of whether it is up or down. ADX is usually plotted in a chart window along with two lines known as the DMI, the directional movement indicators, which we're going to go over in a little bit. ADX is derived from the relationship of those DMI lines, and there's going to be a plus DMI and a minus DMI, which we're going to look at in a little bit. The green is going to be showing the plus DI directional indicator, and the minus DI is going to be in the red, and that's basically showing the downtrends. The ADX is going to be the average in between those, so you're looking at this black line, so they are averaged together, so you can kind of start to see a pattern and a trend of what they're doing. And yeah, we're going to go over the plus and minus DI in a little bit, but this is basically averaging them. Next is going to be stochastics, and is going to be a technical momentum indicator that compares a security's closing price to its price range over a given time period. The oscillator sensitivity to the market movements can be reduced by adjusting the time period or by taking a moving average of the result. This indicator is calculated with the huge math equation. I just don't even want to mess with that. Y'all can definitely look at that. I put it in small text just because we're stock traders, we're not mathematicians. So this was going to show stochastics, and like similar to the last one, you have the solid black lines, and then you have the dotted lines. Obviously, when the black line crosses above the dotted line, you're going to be seeing the bullish trends, and when the black line crosses below the dotted line, which is kind of the average, then you're going to be seeing bearish. And be sure when you're looking at these charts, try to relate the top, which is going to be the candles showing just the actual stock and the stock prices. Try to compare those with the indicator, because as you can see, some of these almost mirror them, just because this is exactly the same time frame. So you're looking at this, you're looking at this, so you can basically tell what it's going to do, and you can see up, down, up, down, up, down. It mirrors it. It's basically a mirror. So it's good to start looking at this chart in relation to these indicators. Next is going to be the RSI, which is the Relative Strength Index, and that's going to be the technical momentum indicator that compares the magnitude of recent gains to recent losses in an attempt to determine overbought and oversold conditions of an asset. And it is calculated using this formula for those math whizzes out there. And basically we're looking at this indicator down here. You can also see it mirroring again. This is another momentum indicator similar to the other momentum indicator we went over earlier, and it is basically showing, it's basically showing the momentum. You can see it kind of going in a consolidation here, going upwards, going downwards, and all of these are basically for you to be able to catch trends, and that's overall what we're looking for as an options and a stock trader, is trends, because you never know what a stock's going to do over 1-2 days usually, but stocks repeat themselves similar to like humans and stuff like that, so you want to catch up on the patterns, and that's where you're going to make your money. We went over the ADX. Breaking the ADX down, it is an average between the plus DI, which is the positive directional indicator, and the negative DI, which is going to be the negative directional indicator. And both of these, like I went over, positive DI is going to be the uptrend, and it is basically showing it's a sloping upward, is a signal that the uptrend is getting stronger. The indicator is nearly always plotted along with the negative directional indicator, so you can kind of get a better view of it. The negative DI is going to be the exact opposite, as y'all have probably guessed. It's going to be the downtrend, and literally exactly the opposite of what it just said over there. It's going to be plotted with the positive DI. So, trying to make sense of all of these, I'm going to go over some strategies that we like to use while looking at all of these indicators. And if we're looking at a call, we're going to want to buy it after a pullback, which is if a stock were to be going bullish and then pull back down, possibly profit taking or something like that. You'd want to buy it after a pullback after a close above the 7-day simple moving average. A pullback can come after a decline in price through selling pressure, taking profit, or a drop down touch, or through the 20-day line or down the 50-day line. Always wait until the price has risen above the 50-day and holds its price pattern. So that's talking about the SMAs. Another call situation would be crossover of the 7-day simple moving average through the 20, and that is going to be a strong bullish signal, and with a close above the 7-day simple moving average, so you know the trend is going to hold. The MACD and the ADX cross, preferably with low stochastics and rising RSI, with the positive divergence agreeing with the other indicators. Basically, the MACD and the ADX crossing, and all your stochastics and your RSI are mirroring what you think the stock is going to do. Next, we're going to go through the puts, and the puts are going to be pretty much the exact same opposite. That's the beauty of puts and calls. It's going to be pretty much the exact opposite on the flip side. Buy after the 7-day simple moving average drops and crosses below the 20-day or the 50-day, which would be 50-day would be extreme bullish signal. 20-day would also be a bullish signal. And if the MACD crosses downwards and the ADX cross shows the negative directional index dominating by crossing over the positive DI, and the average directional index strength line with a high stochastics that is dropping and the RSI heading downward, that is negative divergence and agrees with the other indicators. So basically you're looking at the MACD and the ADX cross again, and you're looking in relation to the negative DI and the positive DI with the ADX. So basically you're reviewing all of these just to make sure, okay, this one's agreeing, that one's agreeing, and you're going to want at least 2 or 3 of them agreeing before you would place a trade. And these are basically breaking them down all separately. I thought I would get on, and this is all this information is courtesy of Investopedia.com, so I appreciate that from them. So we've seen all of these separately. What would something like this look like all together, and how would you get it? So I'm going to just basically log on real quick. Another thing that you're going to be, another website basically really key to trading is going to be stockcharts.com. FinViz is really good, but StockCharts utilizes a lot more of these indicators that we've been going over. And since it's on our watch list, I was going to go over Apple since it has a downtrend and an uptrend. All of this can be a little intimidating, just it's a lot of different stuff going on. Basically, with these, we're going to be setting the moving averages, like we said, the 7, 20, and the 50. So you can do that, 7, 20, 50. And then you're going to want to update the chart. So now you can see the 7, the 20, and the 50. And then we're going to want to get the RSI, which you can stick with that parameter. We want those below so it doesn't get too cluttered. The MACD and the ADX, which we went over. It's the with the positive DI and the negative DI. Update those. So now you got this beautiful stock chart with your SMAs. You're gonna look at the SMAs and say, okay, this is crossing over the 20 is crossing over the 50. That's looking kind of bullish. Oh, see, look at that. The RSI is showing that it's about to, obviously it's bullish. It's going up here, and it's obviously breaking through this up here at the peak. You're seeing the MACD, the solid black line crossing over the red line, and that's bearish like we just went over. This is going to be the some of the volume of it too. And the ADX, oh, these don't have, on the non-paid version of StockCharts.com, you can't get the positive DI and the negative DI on here, so this one isn't really too helpful without those, but you can kind of pick up on some general trends with that. And I mean, that's going to be it for our strategy of the week on some of the indicators that the HFO team uses to find those trades.